Welcome back to the channel. Today's video is a must-watch because we're diving into one of the boldest market calls of the year. Tom Lee from Fundstrat just went on CNBC's Squawk Box and made a huge statement. This is the start of a new bull market, and 6,600 on the S&P is still in sight. If you've been uncertain about where the market is headed, this interview is going to give you a lot to consider. Tom Lee not only reaffirmed his bullish S&P target, but also explained why he thinks the broader macroeconomic landscape is stronger than most people realize, from rapidly cooling inflation to a potentially more dovish Fed stance on the horizon. He even touched on Bitcoin's momentum and what that could signal next. After I play the clip of Tom Lee's interview, I'll be sharing my full reaction and analysis, breaking down what he said, what I agree with, what I think he might be missing, and most importantly, what it all means for investors like us right now. Then, I'll reveal two tech stocks that I believe are well positioned to benefit if this new bull market is truly underway. These are stocks I've been keeping a close eye on, and I'll walk you through why. So if you're looking for direction in this market, whether you're thinking of buying, holding, or just observing, you'll want to stick around to the end of the video. This one could make a real difference in how you approach the next few months. Be sure to hit the like button. Let's try to get this video to 1,000 likes. Share it with a friend who needs to hear a bullish perspective. Leave a comment below with your take on Tom Lee's prediction, and don't forget to subscribe so you never miss an update. Now let's hear exactly what Tom Lee had to say.
It is the first trading day of June, second day of June. Our first guest today says the current market looks more like the start of a new bull rather than a late cycle bull, and that could mean some good buying opportunities. Joining now is Tom Lee, Fundstrat Capital CIO and head of research and a CNBC contributor. He's very calm, even in the face of adversity, but this time the markets have come back to you in a big way. Because at this point, I think they've exceeded your targets they were a couple of months away from where we are right now, and we're already there. So you're raising your targets overall?
Yes, I think, when at the April lows, we thought we could make a move back to 5,500.
Right, we're at 5,900 on the S&P.
That's right. But our full year target was 6,600, so I think that's still a reasonable expectation.
You never changed that?
We haven't changed it.
Never did? Even on April, the week of April 2nd or 7th or 2nd, you didn't change it?
No, it felt very shaky because that would have been, a couple 1,000-point move needed. But now that I look at 2026, I think businesses are in better shape now than they were in February. So I think making 6,600 actually seems more achievable today than it did in February.
And you think a bull market started April 7th, or a new bull market started April 7th? In everything, because the NASDAQ already, if you just use 20% to measure what is an actual bull market, people think we need a broader indicator, a broader reason to call something a bull. But at this point, I think the S&P is also in a bull market.
Yeah, I think that the waterfall decline into the April lows was such a reset of sentiment. People talked about Armageddon, and we saw some of the most rapid deleveraging of hedge funds ever, and a collapse in investor sentiment, and a huge change in positioning. So those are, I think, things that look like what happens in a bear market. And the ISM has never broken above 50 in a sustained way. Market tops usually need an ISM to stay above 50 for a period of time. So I think we're at the start of a bull market. And as I look at 2026, I think housing could actually be a big lever to pull next year.
What do you think of the recent inflation data? And is it real? Is it lasting? Is it going to turn around and head back up because of tariffs? Were you surprised at those numbers on the last couple of Friday and then a couple weeks before then?
Well, as you know, the inflation for the last month actually has defied expectations because a lot of people said these shortages would cause a spike, and instead core inflation actually has been trending lower. But to me, inflation was really a story about housing and auto insurance. Those were powering inflation for the last 2 years. I mean, combined, that's 75% of the rise in inflation. Housing is actually now subtracting from inflation month over month, and I think in some ways, on a real-time basis, that tells me I don't think core inflation is actually going to be turning up, even if goods prices go up.
You don't?
No, I kind of agree with Waller's comments.
You do agree with Waller's comments?
Yeah.
So you're anticipating cuts, several cuts this year?
Well, I think that if core inflation behaves, then we are in a really tight real rate environment, right? 4.5% monetary policy and 2.5% or 2% core inflation. I mean, there's a need to actually reduce interest rates.
Do you, Tom, at this point think that interest rates, because it doesn't matter whether we reduce or not, would the long end go up if they reduce the short end because of $37 trillion or this bill that's the big, beautiful bill? Are there worrisome things on the horizon other than inflation, current inflation?
Well, yeah, the U.S. is on an unsustainable sort of path for deficits, but Japan's actually had higher rates, and their interest rates have been behaving for a long time. I mean, not recently. So I think the long end is essentially unpredictable. When investors worry about it rising too dramatically, then I think that's when the bond market can have some influence on both the Fed and the Treasury. But I think at these levels, it's not that alarming.
What's Bitcoin? What is it moving with? Just risk assets at this point? It got back to an all-time high, which you were forecasting as well. But now I think, what are we, 104 this morning? So it's pulled back. Yeah,
I think it's consolidating. It makes sense. Bitcoin is responding to global liquidity, which is moving up, and I think anticipating a dovish Fed next year. So that's a tailwind for Bitcoin. But, Bitwise has a great stat. 95% of all Bitcoin's been mined, but 95% of the world doesn't own Bitcoin. So I just think that there's still a huge demand versus supply imbalance, meaning there's a lot more potential buyers of Bitcoin over the next 10 years. And so I think there's a lot of upside into year end.
Into your 150 target?
150, maybe 200, even 250 this year.
What? 150 to 200 to even 250. And what's you don't have a terminal price on that, do you?
Well, it's, I think at a minimum it should have the same network value as gold. Mm-hmm. And if you look at above ground gold, it's probably 23 trillion. So that would be, 1.2 million for Bitcoin. But I think Bitcoin is more valuable than gold. So, Bitcoin could be 2 million, 3 million long term. Even higher. Okay.
Thank you. And we're talking years, obviously, but 95% mined. I don't think the last one is mined till 2150 or something. It's getting harder and harder.
Yeah, depending on what decimal you want to use, it's probably 2040 or something. But but it's if you're having something forever, it'll always.
So what's your terminal value?
That's what we just said.
The final.
He said 2.5 million.
2.5 million at the end.
Yeah.
Or maybe higher.
Or maybe even higher.
I didn't appreciate that point.
Yeah, it could.
But I guess the way I meant that is, does that happen at the end after it's all?
When it's all mined.
When it's all mined?
And there'll be network fees generated.
Or does that happen before it's mined?
It's like as if Berkshire did a buyback and there was only one share left. What would Berkshire's share price be? It'd probably be the market value of Berkshire.
And as you said, if I go halfway to the wall, and then halfway to the wall, and then halfway to the wall, I'll never get to the wall.
Yeah, that's right. You can cut something in half forever.
This video is sponsored by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. So first things first, Tom Lee wastes no time letting us know that he believes we're not at the tail end of a bull market, but actually just getting started with a brand new one. Let that sink in. He's saying this market isn't running out of steam, it's just getting warmed up. Now keep in mind, this is coming from someone who's been pretty accurate in his calls lately. He reminds us that back in April, when markets were shaky and sentiment was tanking, he held firm on his bullish target for the S&P 500 reaching 6,600. At the time, that felt way out of reach. But now, with the S&P already at 5,900, that target looks not just realistic, but probable. According to Lee, what happened in April wasn't a sign of collapse, it was a massive reset. Hedge funds were dumping positions, investor sentiment hit rock bottom, and people were throwing around the word Armageddon. That kind of panic, he argues, is more typical of a bear market bottom, not a top. He even points out that the ISM, Institute for Supply Management Index, which tracks manufacturing activity, hasn't stayed above 50 in any meaningful way. And historically, bull market tops usually don't happen unless ISM readings are strong. That's another signal in his eyes that this isn't the end, it's the beginning. And here's something else interesting. Lee sees housing as a potential key driver of growth in the next year or two. That's a bold call, especially with so much uncertainty still hovering over interest rates and affordability. But in Lee's view, businesses are better positioned now than they were even back in February, so he sees the foundation being laid for something big. Now let's talk about inflation, because this is where it gets really nuanced. Tom Lee makes it clear, he's not in the inflation is roaring back camp. In fact, he says it's doing the opposite. Even with all the talk about shortages and tariffs, recent core inflation data has defied expectations. Instead of going up, it's actually been coming down. And he makes a key point. Most of the inflation over the past 2 years has been driven by just two things, housing and auto insurance. Not food, not energy, housing and car insurance. Together, he says they accounted for about 75% of the total rise in inflation. But now, housing is subtracting from inflation on a month-over-month basis. That's a huge shift, and it tells Lee that core inflation might continue to drop, even if goods prices go up slightly. He even aligns himself with Fed Governor Christopher Waller, who's been hinting that rate cuts might be justified if inflation continues to cool. So yes, Lee thinks the Fed could cut rates several times this year. And that's a game changer for both stocks and risk assets. Speaking of risk assets, let's talk Bitcoin. Tom Lee's view on Bitcoin is, well, let's just say it's ultra bullish. He's not just looking for $100K. Nope, he's throwing out end-of-year targets like $150K, $200K, and even $250K. Why? According to Lee, it's all about supply and demand. He points out that 95% of all Bitcoin has already been mined, but 95% of the world doesn't own any. That, in his eyes, creates a massive long-term imbalance between demand and supply. He also says Bitcoin is tied to global liquidity, and right now, that liquidity is moving up. Couple that with the likelihood of a more dovish Federal Reserve, and you've got the perfect environment for Bitcoin to thrive. And then comes the real eye-opener. Lee suggests that over the long term, Bitcoin could be worth as much or more than all the gold in the world. He notes that gold has a market cap of about $23 trillion. So if Bitcoin matched that, we're talking about a price north of $1.2 million per coin. And if it surpasses gold in utility and demand, he casually throws out numbers like $2 million, maybe even $3 million per Bitcoin, eventually, one day. Now, of course, these are long-term views, not price targets for next month. But it tells you where Lee's head is at. He sees Bitcoin as more than just a volatile digital asset. He sees it as digital gold with far more potential upside. So what do we take away from all this? Tom Lee is painting a picture of optimism, one where inflation is cooling, interest rates are about to fall, stocks are just getting started on a new bull run, and Bitcoin has a bright future ahead. Now, whether you agree with him or not, it's important to understand his perspective. He's not just throwing out wild guesses, he's building his argument with data, history, and macro trends. Personally, I think some of his calls are bold, but they're not out of left field. The signs he's pointing to, sentiment resets, improving fundamentals, disinflationary trends, those are all very real. Whether or not the S&P hits 6,600 this year, or Bitcoin reaches $200K, the broader takeaway is this. We could be at the beginning of something, not the end. And if he's right, that means opportunity. Let me know in the comments, do you agree with Tom Lee's outlook? Are you buying into this bull market idea, or are you still cautious? What's your take on Bitcoin's future? Don't forget to like the video if you found this breakdown helpful, and hit subscribe for more content just like this. Now let's jump right into the two tech stocks to buy now and boost your portfolio. We're kicking things off with Palantir Technologies, ticker symbol PLTR. This company has been making waves in the tech and investment communities alike. Palantir is a name that's been buzzing around the investment community for a while, and for good reason. Investors are excited about its potential and the innovative solutions it brings to the table. This company is a leader in data analytics and AI, providing critical insights that help organizations make informed decisions. Their technology is at the forefront of the data revolution. Imagine having the power to sift through mountains of data and extract actionable intelligence. That's what Palantir does, and they do it exceptionally well. Their platforms are designed to handle vast amounts of data efficiently, and they do it exceptionally well. Their high-performance computing capabilities ensure that data is processed quickly and accurately. Founded in 2003, Palantir has grown into a tech powerhouse, with a strong presence in both the public and private sectors. Their journey from a small startup to a major player in the tech industry is nothing short of remarkable, serving a diverse range of clients from government agencies to private corporations. Their ability to cater to such a wide array of clients speaks volumes about their versatility and expertise. Their platforms, Palantir Gotham and Palantir Foundry, are designed to integrate, manage, and analyze data at scale. These platforms are the backbone of their operations, enabling clients to harness the full potential of their data. Gotham is primarily used by government agencies for counterterrorism and defense, providing them with the tools they need to keep us safe. The platform's capabilities in these areas are unparalleled, while Foundry is tailored for commercial clients, helping them optimize operations and drive growth. Foundry's flexibility and power make it an invaluable asset for businesses looking to stay ahead of the competition. What sets Palantir apart is its ability to handle complex data sets and provide real-time insights. This real-time capability is crucial in today's fast-paced world, where timely information can make all the difference. This is not just about crunching numbers, it's about transforming raw data into strategic assets. Palantir's technology turns data into a powerful tool for decision-making. For instance, during the COVID-19 pandemic, Palantir's technology played a crucial role in managing vaccine distribution and tracking the spread of the virus. Their contributions in this area have been widely recognized and appreciated. Their solutions have proven to be indispensable in crisis situations, showcasing their real-world impact. Whether it's a global pandemic or a natural disaster, Palantir's technology is there to help. Investors have been particularly excited about Palantir's potential in the commercial sector. The company's ability to expand beyond government contracts and into the commercial realm is a significant growth driver. The company has been expanding its client base, signing deals with major corporations across various industries. These partnerships are a testament to Palantir's value proposition and the trust that major corporations place in their technology. This diversification is key to Palantir's growth strategy, reducing its reliance on government contracts and opening up new revenue streams. By diversifying, Palantir is positioning itself for long-term success. As more companies recognize the value of data-driven decision-making, Palantir's market opportunity continues to expand. The demand for their solutions is only going to increase as businesses seek to leverage data for competitive advantage. Financially, Palantir has been delivering solid results. Their revenue growth and profitability are indicators of a healthy and thriving business. In their latest earnings report, the company posted impressive revenue growth, driven by both government and commercial contracts. This balanced growth is a positive sign for investors. With a market cap now sitting at $309 billion, earnings per share at 24 cents, and a price-to-earnings ratio of 548.75, the stock has surged over 509% since the start of 2024. The company pulled in $2.87 billion in revenue this year, delivering a net income of $462 million. Impressive numbers that reflect a strong turnaround from previous years. One of the biggest catalysts driving this momentum: government contracts. The U.S. government is expanding its use of Palantir's Foundry platform across federal agencies, with expenditures now exceeding $113 million since the current administration took office. Notably, Palantir also secured a major federal contract under the Trump administration worth hundreds of millions to develop a comprehensive data infrastructure system. But the company's influence doesn't stop with government contracts. Its AI capabilities are becoming increasingly central to public sector operations. Palantir has partnered with Fannie Mae to power an AI-driven crime detection unit, reinforcing its growing role in government tech initiatives. As a result, U.S. commercial revenue has skyrocketed by 71%, signaling significant adoption across the private sector as well. Analysts are optimistic about what lies ahead, with forecasts pointing to over $3.74 billion in revenue for fiscal year 2025. Palantir is not just keeping pace, it's exceeding expectations. And despite some caution, the median one-year price target now stands at $100.13, suggesting there's still considerable upside. Palantir's combination of high-profile partnerships, AI innovation, and consistent earnings beats makes it one of the most closely watched tech stocks on the market today. Its current trajectory, bolstered by both public and private sector demand, paints the picture of a company that's just beginning to hit its stride. They've also been investing heavily in research and development, ensuring they stay ahead of the curve in AI and data analytics. This commitment to innovation is what makes Palantir a compelling long-term investment. Investors looking for a company with a strong focus on future technologies should definitely keep an eye on Palantir. However, it's important to note that Palantir is not without its challenges. Like any company, they face obstacles that they need to overcome to continue their growth trajectory. The company has faced scrutiny over its government contracts and data privacy practices. These issues have raised concerns among some investors and stakeholders. While these concerns are valid, Palantir has been transparent about its operations and is working to address these issues. Their efforts to improve transparency and address privacy concerns are steps in the right direction. As an investor, it's crucial to weigh these factors and consider the company's overall potential. Understanding both the opportunities and the risks is key to making an informed investment decision. Looking ahead, Palantir's growth prospects remain strong. The company's strategic initiatives and market positioning bode well for its future. The increasing demand for data analytics and AI solutions presents a significant opportunity for the company. As these technologies become more integral to business operations, Palantir is well positioned to benefit. As they continue to innovate and expand their client base, Palantir is well positioned to capitalize on this trend. Their ongoing efforts to enhance their technology and broaden their market reach are promising. For investors seeking exposure to cutting-edge technology with real-world applications, Palantir is a stock worth considering. Their innovative solutions and strong market presence make them a compelling choice for those looking to invest in the future of data analytics and AI. Next up we have Lam Research, ticker symbol LRCX. This company is a cornerstone in the semiconductor industry, playing a crucial role in the production of the technology that powers our modern world. Lam Research is a leader in semiconductor manufacturing equipment, providing the essential tools and technology that enable the production of advanced semiconductors. These semiconductors are the backbone of countless electronic devices we use daily. Playing a pivotal role in the tech industry, Lam Research's contributions are felt across various sectors, from consumer electronics to industrial applications. If you're using a smartphone, laptop, or any other electronic device, chances are, Lam Research had a hand in making it possible. Their technology is embedded in the very fabric of our digital lives. From the smallest gadgets to the most complex systems, Lam Research's equipment is integral to the manufacturing process. Their tools are used in the production lines of major semiconductor manufacturers, ensuring that each component meets the highest standards of quality and efficiency. They provide the tools and technology that enable the production of advanced semiconductors, which are the building blocks of modern electronics. These semiconductors are essential for the functionality and performance of today's electronic devices. The microchips produced using Lam Research's equipment are found in everything from smartphones and computers to cars and medical devices. Founded in 1980, Lam Research has established itself as a key player in the semiconductor supply chain. Over the decades, the company has grown and evolved, continually adapting to the changing needs of the industry. Their innovative solutions are used by semiconductor manufacturers worldwide to produce chips with higher performance and lower power consumption. This is crucial as the demand for more powerful and efficient electronics continues to grow. As consumers and industries alike seek faster, more reliable technology, Lam Research's contributions become even more significant. Lam's technology is at the heart of this evolution, driving advancements in areas like artificial intelligence, 5G, and autonomous vehicles. These technologies are set to revolutionize the way we live and work. Driving advancements in areas like artificial intelligence, 5G, and autonomous vehicles, Lam Research is helping to shape the future. Their equipment is essential for developing the next generation of smart, connected devices. One of the reasons Lam Research stands out is its commitment to innovation. The company invests heavily in research and development, continually pushing the boundaries of what's possible in semiconductor manufacturing. This dedication to innovation ensures that they remain at the forefront of the industry. Their cutting-edge equipment and processes enable manufacturers to produce smaller, faster, and more efficient chips. These advancements are critical as the tech industry moves towards more compact and powerful devices. This relentless pursuit of innovation has earned Lam a reputation as a leader in the industry. Their efforts have been recognized with numerous awards and accolades, highlighting their impact on the tech world. Financially, Lam Research has been delivering strong performance. The company's revenue and earnings have been on an upward trajectory, driven by robust demand for semiconductor equipment. This financial strength provides the company with the resources to continue investing in innovation and expanding its market presence. With a market cap of $107.5 billion, Lam delivered earnings per share of $3.61 and holds a much more modest P/E ratio of 23.2 compared to Palantir. In 2024, the company reported $14.91 billion in revenue and a solid net income of $3.83 billion. From a technical perspective, Lam broke above its 20-day moving average on June 3rd, triggering bullish sentiment and suggesting potential for continued upward momentum. Analysts are keeping a close eye on this one, pointing to Lam's earnings growth, price strength, and its entrenched position in the semiconductor supply chain, especially in etching and deposition equipment, which are critical to chip manufacturing. Lam's financial performance has also been solid. The latest earnings report for March 2025 showed $4.72 billion in revenue, marking an 8% increase over the previous quarter. Gross margins have hit a record high since the Novelis merger, signaling improved operational efficiency. Looking ahead, June 2025 revenue is expected to hit $5 billion, continuing that upward trend. What makes Lam particularly attractive to long-term investors is its strong capital return strategy. The company offers a shareholder-friendly dividend of 89 cents annually, yielding 2.79%. It also boasts a high return on equity of 44.82%, showing its effectiveness at turning investment into profit. Combine that with consistent share buybacks and leadership in a critical tech sector, and you've got a company with real staying power. Driven by robust demand for semiconductor equipment, Lam Research has consistently posted impressive financial results. Their latest earnings report showed significant growth, beating Wall Street expectations. This financial strength provides the company with the resources to continue investing in innovation and expanding its market presence. Lam Research's growth prospects are closely tied to the broader trends in the tech industry. The ongoing digital transformation, the rise of AI, and the rollout of 5G are all driving demand for advanced semiconductors. As a leading supplier of semiconductor manufacturing equipment, Lam is well positioned to benefit from these trends. Their technology is essential for producing the next generation of chips that will power the future of technology. However, like any investment, Lam Research comes with its risks. The semiconductor industry is highly cyclical, and demand can fluctuate based on economic conditions and technological advancements. Additionally, the industry faces supply chain challenges and geopolitical risks, which can impact production and profitability. As an investor, it's important to consider these factors and assess the company's ability to navigate these challenges. Looking ahead, Lam Research's outlook remains positive. The company's focus on innovation and its strong market position provide a solid foundation for future growth. As the demand for advanced semiconductors continues to rise, Lam is well equipped to capitalize on this trend. For investors seeking exposure to the semiconductor industry, Lam Research is a stock that offers both growth potential and stability. With its strong financial performance, commitment to innovation, and strategic position in the market, Lam Research is poised for continued success in the years to come. Overall, both Palantir and Lam Research are showing strong fundamentals and market momentum, albeit in very different ways. Whether you're looking for high growth potential in the AI and data space, or dependable performance in semiconductor tech, these two names deserve a spot on your watch list as the market continues to evolve. If you're enjoying these stock tips and you're ready to level up your investing skills, then you're in for a treat. I've got something game-changing for you that will transform the way you approach investing. I've just relaunched my Value Stocks Investing Master Course, designed to teach you the exact principles used by investing legends like Warren Buffett and Benjamin Graham. These are the strategies that have stood the test of time and have been proven to work in various market conditions. But this isn't just theory. This course is packed with actionable insights and practical knowledge that you can apply immediately. You'll learn how to spot undervalued companies using real-world metrics, build a high-quality portfolio, and make informed decisions that can lead to substantial returns, and protect your investments, no matter what the market throws at you. This course will equip you with the skills to navigate through market volatility and economic downturns. Whether you're just starting out or want to sharpen your strategy, this course is tailored to meet your needs. It's designed to be comprehensive yet easy to understand, making it perfect for both beginners and seasoned investors. This course gives you the tools and confidence to grow real, long-term wealth. Imagine having the knowledge to make smart investment choices that can secure your financial future. It's packed with step-by-step lessons, powerful insights, and practical strategies you won't find anywhere else. Each module is designed to build on the previous one, ensuring you have a solid foundation before moving on to more advanced topics. So if you're serious about investing smarter and building a future you're proud of, click the link in the description and pinned comment to join today. Don't miss out on this opportunity to transform your financial life. Trust me, your future self will thank you. The knowledge and skills you gain from this course will be invaluable as you navigate the world of investing. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, then you need to join our community. Join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of these stocks I mention here, along with access to a community of like-minded investors. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. You'll get access to exclusive content, detailed stock reports, and much more. Our members there get full in-depth analysis on most of these stocks I mention here. You'll be able to make more informed decisions and stay ahead of the market trends. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Don't miss out on the chance to elevate your investing skills. Link is in the description. Click it to join us and start your journey towards smarter investing. What do you think about Palantir Technologies and Lam Research? These companies are making waves in their respective industries. Do you see them as the future giants of their industries? Their innovative approaches and cutting-edge technologies are certainly worth watching. Leave your thoughts in the comments below. I'd love to hear your opinions and insights on these companies. And don't forget to like this video if you found it helpful, share your thoughts in the comments, and let's get a discussion going. And subscribe to the channel for more valuable content. Thanks for watching, and I'll see you in the next one. Stay smart, stay invested.